right, guys, we are back for another exciting episode on the BLD Financial Podcast, and we are graced today with Mr. Samuel Castillo. Samuel, say hi.
Hey, how's everyone doing? Thanks for having me, guys.
Thank you for coming. For people
Yeah.
who don't know, Sam is a insurance wizard. Sam and Aaron and I started doing business a little while ago. Sam specializes in helping investors, developers, in navigating the complex world of insurance.
Yeah, absolutely. So definitely dove into it probably like 3 years ago now, and it's been so much fun. And getting to know people like you guys, investors, we're all a special type of person, right? So it's been interesting to say the least.
Yeah, beyond being a phenomenal guy, Sam's great to work with, great person, does a lot of charitable work, likes to have a good time on the golf course, and is one of the better insurance agents that I've come across. And I think that it's kind of timely that we're doing this podcast because insurance, for anybody who owns a multifamily building, is kind of like a thorn in your side. And
Yeah.
a lot of things are changing right now, from premium costs, and I think it's kind of like a cloud as to where are things going, why are things going up, how best to structure. So we kind of wanted to dig
Yeah.
deep into multifamily insurance, builder risk insurance, kind of open up your world to people listening.
Yeah, yeah. Well, you know what? You're not alone when you see it. Like it's really confusing for a lot of people, even for just joining. And like it took me 15 years to know what I don't know in this industry. It's complex, a lot of legal mumbo jumbo, and it's one of those things where you got to really jump into it, get to know the wording, so you can kind of tell your clients in English what it all means, right? So. It's if you don't know too much about insurance, you're not alone, we're here to help make it easy.
It's probably one of those topics where, you take a look through like a mortgage commitment. There's a lot of stuff in there. I'm sure reading through your insurance policy, even just as much or even more so lingo that the average individual is like, I don't know what any of this means, but sure, let me sign on this line.
Yeah.
Here and hopefully it's all good.
Yeah, hopefully I trust you.
Yeah.
And a lot of it is trust. It's especially when you're looking at thorn in your side, right? Like it's a pretty hefty part of your expenses, right? So like for me is understanding, what am I paying for? Is it something that it's worth paying for? What type of coverage do I have, right? Making it all relatable to your client is really, really important, because sometimes it goes one way and it goes the other. It could go one way where you're just like, I'm saying no to everything. Right? You're saying no to every extra coverage or stuff that you might not understand. And then all of a sudden something happens and then you're SOS. And that's kind of, for me, the worst feeling is when a client, for me, it's telling them exactly how it works so they can make the decision. Right. But it's definitely one of those things that you need to get education on. And that's why we're here. I'm so happy to be here with you guys. Spread the good word of insurance.
Well, insurance is unique too from a building perspective because it's one of the few expenses you can kind of control.
Yeah.
In a way, like, you're good luck going to the utility company and kind of negotiating your rates, right? But you can shop around on your insurance. You can find cheaper quotes, obviously if you don't have the cheapest one out there, but it's one of those few things where you can actually kind of put some physical effort into reducing your overall expenses. And it goes a long way with helping with your debt servicing, especially if you're buying in Ontario. You're already pretty tight on your debt serviceability. If you can save 2, 3, 4, 5, 10, depending on the size of your policy a year, that gives you a lot of room. And in today's world where bonds are up, you get 2-3 bips of extra room in your premium. It's or in your even on your debt servicing. Yeah, that could be $10,000 to $20,000 in buy down. You don't have to put on your closing.
Yeah, everything's tight right now. So I always explain it is when everybody's rich and striking 50% returns year over year. No one wants to talk about insurance. No one wants to deal with something that's kind of annoying to deal with. So I think a lot of the way it went to the wayside for quite a bit of time, where it was okay. I don't mind paying whatever it is, or I don't want to look into it or spend time kind of looking for insurance companies that match your needs. But I think right now with we were at the cottage a couple weeks ago, and you seen the bonds just go crazy, right? And you know, what that means to your clients is things are going to get a little tighter, right? So you got market rents going down, you got expenses going up. Things are tight for investors, right? So
absolutely. And I, as touching on what Aaron said, like people are looking to find a way to be able to have some control over the aspect of their investment, which, you know, a lot of those aspects you don't have the control over. You know, as a building owner myself, we are seeing just year over year increases in our insurance premium.
yeah,
There's kind of like this blanket of, oh yeah, you know, it's just more expensive now. Like,
yeah.
what's going on? Why are insurance premiums drastically increasing? Is it just like inflation, cost of actually building?
Yeah, yeah. Well, so there's like, we'll talk about more investors because most of your clients are investor focused people, and so are mine. So I think you know, for there's two sides of it. There's one that actively already build like buildings are already standing, and then you have acquisitions or land acquisition, and you're going to build on it. So you have, you know, the buildings right now that are already standing. You know, the cost has gone up due to a couple things. You have inflation and you have tariffs. So you have tariffs that, you know, it's, you know, when you add, you know, 25 or 30% tariffs, that means the cost of our goods that we're bringing over from the States, that increases the build, right?
My premium went up long before Trump, brother. That seems like a scapegoat answer. Like,
well, I mean, it's part of it, and into COVID too, right? Like COVID, you've seen the price of everything go up. I mean, you had kitchens, like, you know, if you're gonna do a renovation on a kitchen, that would take so much longer for it to come in.
so are you guys just pricing like cost of good increase, like the actual cost to you know, replace that specific building or whatever that might be? Like, it's just you guys are tracking CPI annually on certain things.
Yeah, and manual labor. So you have, you know, you have inflation tariffs and you have manual labor. For every 6 people that are retiring in trades, I believe 1 to 2 is being introduced into the trade. So we're having, you know, that demand of labor, of skilled labor, you know, anything from electricians, carpenters, bricklayers, all this stuff, they're not being replaced. So the people that are still there, they may stay a couple more years into retirement where they would have retired because they're able to charge so much more, right? So we're seeing a very big push from contracting and also from Ontario and the government as well to kind of introduce people to, you know, you don't have to be a YouTuber, you don't have to be a you know, computer programmer to be successful. You could be in trades, and I think that's been part of the issue as well in certain areas in Canada. It's hard to get people to go out there and work, right? So what do you have to do? You have to pay those contractors more money in order to make it worth for them to go up north or to go in certain areas. So there's a lot of things that go into your premium, and that's one side of it. The other side of it is loss ratios. So our loss ratios for certain things, certain risks, are better than others. Like our builder's risk loss ratio is fantastic. Right.
So for anybody listening, a loss ratio is just the percentage of your files that take a loss versus ones that don't.
Yeah, gotcha. Yeah, on a dollar per dollar basis. So I bring in $100 in premium, we pay out a set amount in losses, right? Yeah. So the lower your loss ratios, the better, right? Like so
when you guys have higher loss ratios across the board, I'm assuming the insurance premium goes up to cover those losses.
Yeah, of course. And that's kind of the basis, right? So for builder's risk, when we talk about builder's risk, so what's builder's risk? Let's just kind of hit that topic. Is you're looking to do a construction project. Right now, we're seeing a lot of people go from triplexes, quadplexes, and they're jumping into that 10, 12plex. And a builder's risk will cover you while you're doing that construction. So if anything happens, you know, a fire, whatever, it covers that build, right? So a lot of banks will need you to have that.
I think every construction lender would require you.
Yeah,
well, I mean, there's been a lot of fires on these new development projects lately, so
yeah, which made me worry. I'm telling you, like in 2020, I was like, oh no, this is like into COVID. Like we started seeing some arson stuff happening, and I got a little concerned, but you know what? So far, the loss ratios have been fantastic. So from my perspective, I have cut on the builder's risk side 3 years in a row.
What does that mean?
That means the rates have gone down
Nice.
for us 3 years in a row, and hopefully that continues. And it's strictly on that part of it is because the loss ratios have been doing pretty well.
Now, is that specific because you're cooperators, right? So is it specific to cooperators loss, or is it like an insurance company as a whole?
Yeah.
The loss, like, is it like it does cooperators? So if cooperators insures, more legitimate developers and there's less issues, is that a benefit through you guys? Is that you guys do your due diligence better, therefore your loss is better, or is it based off the industry as a whole?
It's two things. So like as a whole, I think you're seeing more insurance companies enter the game. So which is giving more demand for us and to be more competitive, like for insurance companies to be more competitive because there's more companies that are entering the builder's risk game. So that's driving prices down a little bit. Loss ratios for sure. For me, you want to make sure that your loss ratios are low and you're dealing with people that are reputable, good people. Just for one, to make your life easier. Like, like clients are a big part of, I think when you first get started, I say this all the time. When you first get started, you're just like, please talk to me. Like anybody, like,
I just want to tell you what I do.
Yeah.
I can help you.
Just spreading the word of like, please give me a shot. And then you start to grow your business. You obviously, at that point, the biggest worry is financials. Like I need to pay my bills and all that kind of stuff. And then you go, I don't want to deal with everybody. You want to deal with clients that you feel that are good people. You feel like, for one, are going to treat your staff well. There's a lot of things that go into when you start to grow your business and you actually become successful. You get to choose who you actually want to deal with, right? Headache clients, all that kind of stuff that we deal with.
When it comes to risk too, like you're not just insuring the building, you're insuring the person who's operating the building.
Yeah.
A lot like when we're doing an assessment on our clients and like their viability of actually completing a project. We're not going to put our relationship in jeopardy with a lender if we know this guy's not going to be able to do what he's going to do.
Right.
It's that level of risk too that, a lot of people don't take into consideration when we're going to give them a product.
Yeah. We call that moral hazard. When you,
it's a great word.
Yeah. and when you see someone, you're just like, you know what, like it's a huge part. And I think right now, actually, just when we're talking about moral hazard or finishing projects, right now we're seeing an uptick in bonds.
We know.
Yeah. Like bonds are a big part of it, right? So I think we're starting to see that uptick. What a bond is in really lame terms is a company that is pretty much pledging for you. This guy, we've done our due diligence. We trust him. If anything goes wrong, he's not able to finish the project or something goes wrong, we're pledging for him. And if anything happens, we'll deal with that between us. They'll pay us back.
Intermediary.
So, intermediary, yeah. And that's something that's definitely coming up a lot is like bonds before is more like when you dealt with government stuff.
Yeah, you're not talking about, and just for people to understand, like you're not talking about like bond yields,
CMB,
like
yeah.
CMB. You're talking about like surety type bonds.
Type bonds. Yeah. So there's two types of bonds that we always talk about in bonds in the market, in the stock market type bonds. But we're talking about a bond that will allow you to bid on a job.
So for all like large, multifamily CMHC construction, like the majority of all the GCs need to be bondable.
Yeah.
So there's a risk threshold where like you need to be a bondable builder or developer to be able to actually take on a certain level of debt. The lenders use that to offset the risk when they're looking to provide financing to larger jobs.
Yeah. So I will say that we're probably going to see a continuation in that uptick. For us, I guess the biggest thing when we're talking about getting to the next level, bringing your construction company to the next level, bringing your portfolio to the next level, you have to make sure that your insurance contact is on the same level with you. Sometimes you outgrow people, right? Like, you know, you had a home and auto policy with somebody. You know, maybe you've had like a couple duplexes. Now you're getting into the construction stage. You know, it's really important that you're dealing with someone that's comfortable in that space and is really jumping in with both feet. Because for me, I studied my butt off, not only from, you know, from the beginning, auto, home insurance, but when you jump into the commercial world, you're dealing with a lot heavier consequences. A lot heavier consequences where it could, like, one big loss, one issue could take your whole portfolio down. And next thing you know, you're starting from scratch. So, so you got to make sure that if you are dealing with, you know, with bigger numbers, you are dealing with someone that's used to those big numbers with you. And that comes from mortgage brokers, it comes with lawyers, and it comes with insurance, your insurance agent or representative for sure. It will make your life a lot easier if you deal with someone that has seen it before and sees it like 10 times a day.
Yeah, you have to graduate away from the insurance agent your parents have used for their entire life, right? Like, it's the same with probably any sort of like professional industry, mortgage guys, bank guys, like whatever. I mean, you know, you're going to be referred to by someone in your family when you're first starting out, because those are the people in your immediate like circle of trust, right? And,
yeah.
I guess some people, you know,
I don't think I got
together.
a friend or
Your
family for the
really
first
loves
2
you,
years of my
but,
business. I had cold turkey.
yeah.
I'll never forget.
Yeah, I'll never forget that either. Yeah. But it's just true in life, right? So there's different levels, and I think, you know, from you guys, just hanging out with you guys really implemented it into your life, into your core of who you are, this whole business. You guys soak it up, which, you know, for me, that's why it was so easy to be friends with you guys, because you're soaking up this business. You are the business, right? Like, you are mortgages, you are, you know, construction loans. You like, this is what you guys talk about. This is what we have fun with. Are we losers or something? Like, I don't know. Like, this is our best, like,
casual
topics.
casual Saturday afternoon talk.
Yeah.
You know, but I
There's just nothing else when your brain is so full of it. It's just, what else do you really talk about?
when you're
yeah.
when you're specializing in the space, though, you know, it's hard to not kind of, you know, be ultra focused on what you're doing. You know, the goalposts continuously move for us. You know, the products move, bonds move, risks move, markets shift, buyers market, sellers market. Like, to be able to have a finger on the pulse of like something that's happening in real time and it's shifting in real time, and to be able to provide the level of you know, expertise or advice to somebody, like, you almost need to be obsessive in like all the policy changes, what's happening, what's coming down the pipe, government policy shifts. It's more than a job, and to be able to be like really effective at it. You know, we're advising clients, you know, hundreds of millions of dollars, and, you know, the decisions you're about to make, you're about to take on massive levels of debt. You know, our rent's going to service what you're looking to do. Like, you really need to be dialed in, and I'm assuming it's the same, you know, for insurance.
Absolutely. And I appreciate how, like, the way how you guys have gone into, I know it's hard to take some love or some compliments sometimes, but, you know, the way you guys speak, the way you guys run your businesses, and you are this business. Like, this is what we talk about when we have 3-hour conversations. We talk about bonds, we talk about this, what the future brings. How can you hedge inflation? There's so many topics, and when you talk insurance and markets and real estate markets and stock markets, they're all kind of related in a really unique way, and that's the important part, is if someone really dives in and is living this business, which we are, right?
Absolutely. Let's dive into something specific, because I think it's a bone of contention for a lot of our clients, is the CMHC requirements for insurance. So, you know, a lot of the times we'll have clients who either have multifamily assets and looking to restructure their debt. Maybe they get into CMHC and they get put in touch with a third-party company. A third-party company is in charge of being able to, you know, make sure that this client is, you know, able to get the specific parameters the lender requires for this insured. And it's very different from like a requirement standpoint than your normal regular building insurance. Can you touch on, really what they want, what co-insurance is,
Yeah.
why they're over insuring buildings, like what you can expect. Because a lot of the times, you call your insurance broker up and you got like, I can get a policy in 2 days.
Yeah.
It takes a week of
Yeah.
going back and forth between this third party risk department and
Yeah.
you to be able to make sure that this happens. And the cost is more, it's over insured. So just touch on why that's happening and what that process looks like.
Yeah, great question. And we see that a lot. The banks have an insurable risk in your property. They've lent you money. They want to make sure, for one, if it burns down, that they're going to get their money back. So what we've seen lately with Equitable, we've seen it with certain banks. They'll use a company like Risk, for example, RISC. I'm sure you guys deal with them all the time.
Yeah.
And it's probably a huge pain in the butt for you guys to be like, why is this taking so long? And why is it hard to get this done? And I think the biggest point is a lot of insurance agents or brokers, they don't understand exactly what the bank needs. It's simple as that. And what the bank needs is they need broad risk coverage to make sure that the coverage is sufficient. If something happens, they want to have multiple coverages available to cover the loss, right? So there's certain companies that will offer, let's say, cash value versus replacement cost. So let's touch on that because that's a big difference. And I have clients that go, okay, well, I got a quote here. It's 30% less, and I go, okay, I already know that it's cash value, that the coverage that they have, and they're going to call me back in 2 days with urgency in their voice because they're about to close, and I already knew that that it was a different type of coverage, and the bank's not gonna, it's not gonna be acceptable to the bank. So the biggest part of the list of coverages or that the lender requires is replacement cost versus cash value. So cash value means that they're gonna give you a depreciated value of the actual building itself,
and they determine that.
So say if it's replacement cost minus depreciation, so there's going to be a reduction in coverage there.
Annually, it's reduced based off of.
Yeah, it's reduced. Yeah,
Gotcha.
Yeah. So cash value. So what they want is they want the whole thing replaced no matter what. If it burns down to the ground, I want it replaced, right? So you can understand why a bank would be like, no, I don't want cash value. I don't want the depreciated cost. I want replacement cost, right? So that's the biggest contention. Some insurance companies, a lot of insurance companies, especially with older buildings, and we're seeing a lot of people buy older buildings. Maybe it was a manufacturing plant or a school. It's an old school. They're now converting it. And you know how a big of a pain it is to even get the banks to accept it? Mm-hmm. Think about an insurance company with an older building with old plumbing and all that kind of stuff. They're not going to want to offer a replacement cost, give you a brand new building when it was a 1920 building, right? So that's a big contention there between, for us is, how can I work with the client to make sure I get all the sufficient information? We're going to, upgrade this, we're going to upgrade that, build a story for an underwriter. And you guys deal with underwriters all the time, so you'll understand is the clearer the picture for the underwriter, the better the result. The more comfortable they are with you, for one, being the underwriter on the ground, and the more comfortable they are with you getting the information and building that story, understanding that this is a good building, this is why, this is a good client. He's gonna do these renovations. He has done these certain renovations. I built this whole story up so that the underwriters are okay with offering certain coverages, and those coverages are a difference between you closing and you not closing. And we know how expensive it is when you don't close.
I think that's a pain we both share in both industries. Is guys who don't want to provide all the documents of give me the quote and then let me see what the quote is and then I'll give you the rest of the documents if I like it. Where it works the other way around. Like the more you give me up front, the more ammo I have to go and get you, your best pricing or your best quote. And then you're going to be, much more happier with it. And I mean, we totally understand it's a lot of documentation. and we get it. But I mean, realistically, you should have all this stuff ready to go. If you're, a well-organized, investor, developer, you should already have this stuff put together, because it's, it's going to help make your process a lot smoother. It shouldn't be, let me go dig through it and let me find it. Like, it should be ready to go in a Google Drive. So, I mean, it makes a huge difference having that stuff up front, because like you said, being able to get those details, especially on some of these more unique projects, the conversions and stuff like that, which we are seeing a lot of.
Yeah.
You could be $5,000 on your premium between having those documents up front and just getting a generic quote on an address and, a quick purview or appraisal or something like that.
And you're so right. And we know what a difference, like on a mortgage, right? Like if you save, like say if it's a bigger project, you might save 15 grand on premium by making sure you got your ducks in a row. And for me, I send the list by email. I'll either call before or right after to the client and say, this is why I'm asking you for all this information, is because that's how I get you the best results. And it's so important that, you've had some people, I'm sure, like get frustrated with you even. It's like, why can't you just get me a quote, or why can't you just tell me what my mortgage payment?
The mortgage magic wand.
The magic wand, right? It's one of the things that for me, I've gotten better at it because I understand where they're coming from. They're busy and all that kind of stuff, and I get it. But if you want to be a player in the game and you want to be successful, if you're not good at getting your paperwork in line, hire someone that's really good at it so you can do what you're really good at. And that's just on a business standpoint, organizational standpoint. Hire what your weaknesses are and just work on that's what I do, right? Like my strengths are, hanging out with you guys, doing these podcasts, meeting with clients. That's my strength. My strength is not sitting there and doing I need to hire that. So for me, sometimes I've had clients where I go, listen, you're not really good at this. You need to hire it out, because what it is, it's going to cost you too much, and it's going to put you in a lot of trouble as a business. Right. Mm-hmm. So make sure that you understand your organization, understand thyself. What's that? Art of war, right? Understand, know your enemy, but know thyself. It's like, you got to know yourself and your own weaknesses. And for me, in my business, it was so important that I understood that I'm really weak at certain things, and I'm super, super strong in certain things. Do what you're good at and hire the rest.
I think they call that ADHD these days. Like, I'm really good at client facing and getting together and networking, but all the other stuff I'm not.
Yeah, the whole work thing. It's overrated.
I'm great when I'm not at my desk, but when I'm at my desk, that's it.
Yeah.
So, I mean, looking into the future, what we're seeing is clients still acquiring older buildings. Where they're acquiring those 70s 3-story walk-ups, 4-story walk-ups. They need a lot of love, a lot of work. What are some challenges or some mistakes that you're seeing investors make when they're getting this insurance? Is there something that they should be focusing on? Because what we're seeing is now we need flood insurance. Now I need earthquake insurance, and we don't have earthquakes. But what are some of the mistakes that you're seeing investors take when acquiring these buildings?
They're getting over their head, right? Like they need to make a home run, right? Like I feel like some investors have, they've gotten used to that 50% return, 100% return year over year, and I feel like sometimes it's important to know your limitations, right? Like I think some people take on too much, and we're seeing these with I have more often than not with these construction builds where you're looking it was a church, now I'm turning it over to 50 units or 30 units, whatever it is. Those for the most part, the people that are jumping into those projects are comfortable in that world. But I think, understanding from an insurance perspective, how, for sure, how difficult is this going to be to insure? Has there been losses, right? Like go through the basement. How does it smell? Does it smell? I lost my scent in COVID, so I'm not the best person to go with the rock through.
Never got it back.
I have good eyes though. Yeah, I haven't got it back.
You lived your whole life without being able to smell.
Yeah, pretty much. Yeah,
that's crazy.
So those bath salts, I can go right in front of it, as hard as I can, and I won't budge.
No way.
Yeah.
Does it affect your taste?
No, taste is still there.
Usually they're pretty connected.
Yeah, it's weird. And it'll come back. Like I'll spray myself and I get a hint of it. But it's if anyone has any pointers on that, that'd be great. But
so they're not targeting you for cologne purchases.
No. I just base my smell on if someone says something or if I get a compliment. Yeah, if I get a compliment or if I get that. Yeah. So it's for sure. You want to make sure that the properties that you're purchasing, you do the proper walkthrough. I know that people are doing that these days. Inspections are back. Yes. Inspections were gone for a while. People were buying on site or off site right away. So yeah, make sure that you, for one, know exactly what you're walking into. Has there been losses?
How would you know if there was losses?
Well, I mean, you could do your due diligence a little bit. You could kind of, I would say.
How do you do due diligence? Like you call you and say, "Hey, Sammy, like, can you take a look?" Or how does that work?
I would say, talking with the buyer the best you can. I mean, most of the time they're not going to want to tell you that.
Absolutely not. They're not going to tell you the massive claim.
Yeah. So
multiple giant water leaks in the building.
Totally covered that. We're fine.
So what you can do is you can talk to neighbors, right? You could talk to neighbors. How like has there been losses in this area? Start working on a quote. Yeah, 100%.
How would a major loss affect your insurance premium if you were buying a property with a major loss previously on it?
It's the area. So another thing which I need to make a point of is you could start working on a quote. And that quote will we have indicators and we know exactly where the floodplains are, highly risk for backups. Either it's an older area, the plumbing hasn't been updated, trees are starting to hit the cast iron. Like some of the stuff hasn't been updated on some streets, right? So we know based on our industry records for claims, but also for water, where the water is, ancient lakes, ancient creeks, all that kind of stuff, where their claims are going to come through. So working on getting a quote is really important because I could say, well, this area, and I get some people go, well, this one's a 10 unit, this one's a 10 unit. Why is this one 30% more? Well, my friend, it's close to a lake. It's on a street that's had multiple losses.
So you can take a look at that information.
We work through that with the quote. Yeah.
Gotcha.
So
you have software that has it all? Or?
Yeah. So it's implemented in our system.
Interesting.
So yeah. So I know based on the rating of the flood coverage, because we base it on area. So before, back in the day, I think it was 2016, we used to just do like comprehensive coverage. Everyone's the same. And then we're just like, okay, well, is it fair that a part of Windsor has 90% of the floods, and then another percent of Windsor or another area gets zero floods, and they're not going to get floods? So we started rating based on area in like 2016, 2015, something like that. I was pretty new to the industry. I started in 2010, 2011. So it was a pretty big change because you had some clients that their rates stayed the same, and then you had some that tripled or quadrupled. And it's like, it was a hard time in the industry, especially when you're dealing, face to face with the clients. But yeah, it does matter where you live, and crime as well, right?
I mean, look at car insurance. Like car insurance in Brampton versus in a small area. Like you just look at that for an example. Like it's a great indicator.
Great indicator of where you live. So we do the same with pretty much everything now, even fire insurance, guys. Like we don't think about, in this area, we're kind of okay with fires. We don't have too many wildfires or anything like that. But out west, you have hail. Hail's a big one. Yep. Like they get hailstorms that are crazy.
We
got
a buddy whose car just gets crushed with massive golf ball size hail.
Yeah, golf.
He's like, I'm not even gonna buy a new car. Like it gets crushed every year.
So like there's different areas geographically in Canada where you're going to have higher claims in certain parts. So it's important that as an insurance industry that we kind of rate based on the risk that's at hand. And that's a big one. Fire is another big one. Even Northern Canada, we have to charge for that, right? Like so certain parts of your policy will be more expensive. So when you're getting into a new building, that's one thing that we could start working on. Start getting a quote together, and we could, once we got all the information, we can, we're pretty good at at the turnaround on quotes. So you can go, damn, this is going to cost, a certain level of that I'm not prepared to do. You can kind of weigh your options and make the best decision on that property based on that. It's usually not that wild that I will say no or yes on a property, but it definitely is something that you could put into your figures, into your calculation, especially as mortgage brokers, right? Like that extra, 30, 40, could be 100% extra on premium, could throw your whole calculation offside.
Especially like if you're buying a pre-existing building, you buy one from a legacy owner and they give you their insurance cost. And what they didn't tell you is they've had it for 20 years and they have dirt cheap insurance. And then a lot of people will leave the insurance to, it's a closing thing, I'm just going to do that later.
Yeah.
You pass your due diligence period, you waive your conditions, you get your insurance, and it's twice as much because that guy has just renewed his insurance for the last 20 years. And now, you have massive insurance premiums. It'll throw your debt servicing off. It'll throw your cash flow off.
Yeah.
When people think of insurance, they think of, again, it's like this closing thing I need to do when I get to my lawyer's office. Like, you should do this before you waive your conditions.
Yeah. And well,
Yes.
the way CMHC works too is like that insurance stuff all gets done after your COI. Like it's all finalized and reviewed and signed off in third party. That happens after COI happens.
Yeah.
So if you don't have your insurance fully sorted out ahead of time, you can get your COI, you can get your commitment letter, have a closing date within 30 days. Or that insurance comes up as a giant mess, like that's going to push your closing out because it's not sorted out yet.
Yeah, it's a big mess. So, I mean, if you can get all that done and don't leave it last minute because especially if you're you might have to change insurance. Like I've had so many calls. Like you'd be surprised how many calls I got. My insurance guy, it's over his head. Like if you're not doing this every day, it's gonna go over. It's like with in your world, like more you go to a cookie cutter mortgage broker, they're not gonna be able to do what you guys do and speak your language. It's two different industries almost. Like it's so true. They'd be like, "What are you talking about?" Like to know the level of bond and to know the intricacies of your business, like you guys, it's. For one, there's capacity that people have as human beings to be able to have that much information and relay it to the real world. Everyone has capacity, and as you get higher and there's intricacies, you start talking about bonds and all that kind of stuff. Some people are just like, I want to just go home and enjoy a coffee or a beer with my loved one. They're not like, us where we're diving in till like 12 o'clock at night, just like looking at screens and looking at graphs and all that kind of stuff. So there's a lot at play here. So for sure, with the closing, make sure you start talking to your
absolutely
sooner than later.
Now, if there is rush, something comes up, like what does that look like with you guys for turnaround? Like, obviously within reason, but realistically on rush files, like how much time do you guys really need to be able to put it all together, have it all done and get that client ready?
So I would say on a good day, we can turn someone around in 3-4 days. Like right now, it's like say right now, if I got a file right now that I needed to close, I'm running into people on vacation, right? Like underwriters are on vacation, so they're short staffed. So it depends on all that, but in a perfect world, 3-4 days, if I have all the information. Sometimes I've issued policies on the same day.
That's initial call to binder being bound.
Yeah.
So you get a quote in like a day, same day.
If I have everything, and I get lucky with an answer on the underwriter's side, and they're willing to have a discussion right now.
Yeah.
And it sometimes, like I think, and that's another thing too, is like, Sam, why do you get great results? Well, for one, I get all the information. I paint the picture, Picasso application, and then I have an underwriter that I might have worked on 10 files that month. They know exactly who I am. They know I know what I'm talking about. They're going to have more faith and go, okay, Sam, like I understand it's a rush for this reason. I don't like to work on rushes all the time. You know what I mean? Like it's almost like, it's another thing too. Like like you have to create expectations for your clients, but for sure, like having those relationships with the underwriter makes the world of difference because they have trust in you. So I have closed deals that close fast. And a lot of it comes into that is knowing what you're doing, getting all the information, having those relationships with underwriters, and they trust you.
So you keep saying getting all that information. So if we're going to submit something to you, say, hey, Sam, you need a quote, like a building condition report, an appraisal, a listing, like
a
what else?
listing, geotech, depending on what exactly you're doing. So if you're doing a builder's risk, we need geotech, we need an appraisal, we need architectural drawings, exactly what the build is. All that information is going to be in your reports, right? Like so. There's a list that I send out, and on that list, I'll be able to go over everything and put everything accurately in. And I attach the documents, so pictures are there. Like if it's obviously a builder's risk, it's not built yet, but the architectural drawings are there. Everything's there. Your history as a contractor, like I put everything in there. Your website's in there, blah blah blah, and then I send it through, and then that's how we get like great results. Great applications equals great results.
It's just funny, like it's another argument for like a building condition where like not every lender is going to require you to get a building condition.
Yeah.
It's definitely optional for you, but again, like it's going to give you a really good idea of like your CapEx expenditure. If there's any deferred maintenance that hasn't been done, what does your cost look like over the next like immediate future, 1 to 3, and then like a 10-year horizon. But it's also going to potentially help or worse than maybe on some buildings or insurance. But again, like if you know you have a good clean building, it's got good like bones and bricks, like being able to over provide those details and more surety for the insurance agents, it's just going to help with your policy.
And I think you kind of have a feeling like this building is something that I'm buying as like it's going to be.
It's when you do a walkthrough. Like a lot of the stuff.
Yeah, clients know. They're just like, I know. Like they probably wouldn't insure it themselves, possibly, right? They're just like, like this is something that we have to put in. Whatever, a mega construction builder's risk on. There's a lot of work that needs to be done and all that kind of stuff. So, but I did want to go back, Josh and Aaron, to not taking the seller's insurance premium. Do not do that. Do not do that. Sometimes insurance, the insurance on the building, maybe they don't even have a mortgage. So it is that actual cash value policy, or it is that named perils policy that just covers pretty much like if there's a fire, nothing else. Or
you just have no visibility on their insurance policy. So it's such a bad direction to be able to underwrite the file. Like usually what we'll do is, if it's really low, we'll just use a benchmark cost per unit to be able to underwrite, which is usually higher than what historical ones are. But great little tidbit of information, because a lot of people will take everything at face value and just underwrite it, and it can be deadly, especially if you're figuring it out after COI is issued.
I mean, you're gonna feel maybe $100,000 less rich or poorer, because I mean, if it's depending on your project, right? If the bigger the project, the bigger the premiums, the bigger the changes could be. So, does anyone have a calculator? I wanted to kind of give you kind of a breakdown of what, let's say, $10,000 in insurance premium savings will do for your return on investment or on a refinance.
Yeah, 5 cap, $10,000 is worth $200,000.
$200,000, guys. So that's a big difference, right? Like just by having the right contacts, dealing with the right people, getting the right advice. That's a big difference. I mean, $200,000 richer, it sounds better than...
Well, you think you're getting a good purchase price, and maybe you're not.
Right.
Like, it's really, really important when you're looking to acquire a building.
Yeah.
Sammy, absolute pleasure, brother.
Absolutely.
Always is. If anybody wants to reach out to you to chat about insurance, to chat about just going golfing, and talk about life a little bit, how does somebody reach out to you?
Yeah, a little bit of everything. Absolutely. So my phone number, hit me on my cell phone, 905-978-1721, 905-978-1721. And I'll send you my email for the post as well. And I'm available. Just reach out to me, even if you just want to talk and get to know me a little bit.
Loves long walks in the park with cute Cocker Spaniels.
Exactly. So it's been fun, guys, and it's been a pleasure to get to know you guys. I'm so proud of you guys. You guys are doing such an amazing job. And man, I can't wait to see what you guys accomplish the next little bit here.
Yeah, buddy, really appreciate you taking the time today. Come on, and we'll put your contact info down below.
Absolutely, guys.